Hi, thanks for tuning in. I want to talk to you today about a recent report that the Consumers Association, which have released about when they've surveyed their members to see what a comfortable retirement would look like and a luxury retirement would look like in the what income that you would need. So they've assumed that they've surveyed their members, and their members have said for a comfortable lifestyle in retirement, £26,000 worth of income is an ideal sweet spot. And also for a luxury lifestyle, £41,000. This is for a couple. So we've got a couple of assumptions, and I want to just share with you my planning software so you can see how I've done some calculations. I've done some calculations. I want to just change them up a little bit and probably extend them out a little bit so that you can actually see how we've put these figures together. So we've got, just going to share my screen with you. And this is some software that I use. I use a number of financial planning softwares when I'm working with my clients. So what we've assumed that I've got two 66-year-olds who are going to get the average state pension that people in receipt. This is not the maximum state pension you can get, just the average people in receipt of today. So that is £8,329 each. So that's pretty good. That's pretty significant. On our way to a comfortable lifestyle of £26,000. 8,329 times 2, so 16,600 odd pounds. A pretty substantial part of the income that someone needs comes from their state pension. So what is it that you actually need to provide? What kind of pension funds or savings funds do you need to provide your retirement income, drawing down from maybe a pension pot? It could be ISAs, but I've focused on pensions for the time being because those are kind of tax advantaged savings that we can do. I've made some assumptions. I've kept them in line with what Which had done. I'm not sure I agree with all of them, but that's a further discussion. But I've looked at growth rates on the pension funds at 3%. That's relatively conservative, I would have thought, but who knows what the future will hold. If you look back historically over the last 100 years, that's pretty conservative. But we are in different times. Inflation's starting to rise. We've got low interest rates. Who knows what the equity return or stock market returns will be over the next 20, 30 years. I've assumed charges on the pension products of 0.75%. Inflation, which have done at 1%. Again, that's pretty benign. The average inflation rate in the UK since 1955 is kind of 5.7%. But they've said, from surveying their members, £26,000 for a comfortable lifestyle. So what do we need? So you can see that in here, just excuse me looking at my other screen here, we've got two 66-year-olds, and what do we get? So I've looked at here. This is this graph. Hopefully you can see. Let's just maybe make that a little bit bigger for you. So that we've got, there's the £26,000 total expenditure. You can see that's growing with inflation as period of time goes on. The light kind of turquoisey colour here is for those state pensions coming in. You can see that to 16,600 odd pounds, and therefore that is the shortfall. So if we need to meet that shortfall, you can see that I've managed to, by putting in some pension pots, I've managed to meet the shortfall up until, I think we're just hitting the red here, at age 96. And if I dive into the current position, I've basically gone and put in some couple of pension pots of £120,000 each, growing, as I say, at 3% with a 0.75 charges, and that will meet that expenditure figure when we're looking to get, to meet that shortfall, which you can see. Ideally, who knows what people's life expectancy is. You can see the average life expectancy here is coming in at 86, so that gets people way over that. And of course, average is average, and one of the partners, a husband or wife, or a civil partnership, could be not average in life expectancy. So you really want to, or both of you could not be average. So you want to make sure that you've got some kind of shortfall or some guarantees in there, which of course an annuity might actually be the most sensible option for you. But generally, you're going to need more capital to purchase the annuity to protect that level of income. It's a whole other discussion, which I might cover off in another video. As I say, for a luxury lifestyle, £41,000, we're all different. Some people's idea of luxury may be £100,000. Some people's idea of luxury may be £20,000. But I will, if you like this video, press subscribe, click the like button, and I'll also show you maybe to produce some more videos on the difference the asset allocation, actually where you've invested the money, is going to makes to the kind of portfolio pot. And of course, we may withdraw more money in early years and less in later years. So there's a whole lot of different modeling that you can use, and as a financial planner that I often put together for people to try and work out the most advantageous way of drawing down from their investments and savings going forward. As I say, hope you like it. Press subscribe and like if you do, and we'll let you know when we put out some more videos, and hopefully keep you more informed about your retirement planning. Thanks for watching.